Welcome to the live stream, ladies and gentlemen. My name is JT and you're watching Black Box Trading. Oh man, what a rebound. You know what? I should have known. I should have called it yesterday because everybody was so bearish. I should have said that because everybody's expecting the market open to be gap down, limit down. I should have said we probably get a rebound day. Doesn't mean we're out of the woods yet. We'll dive into all of that and more. But yeah, so let's just dive in. Let's take a look at the charts. What do you guys think? Are we at a low? Was that the low? Was that the final shakeout? Are we going to go up only now? Tons of engagement yesterday across multiple channels. Everybody's channel was popping off. All the live streams, all of the Twitter spaces were very full yesterday. A lot of people very worried, a lot of people panicking. Bitcoin's not really in panic territory, really. Like if we take a look and just put things into perspective here, from the high to the low, it's 32%. That's par for the course. That's normal activity. That's normal rallies and reactions inside of Bitcoin. Obviously, it's not just Bitcoin that's falling, and the stock market, if you're an S&P trader, you're not used to that sort of shit. You're not used to that volatility. But us over here in crypto land, 5%, that's just a normal Tuesday. That's just nothing spectacular, nothing noteworthy whatsoever. So maybe we are the volatility army that has been brewing in the background, that's actually ready to handle the market events, and the volatility could be expanding inside of the stock market, and most people just don't know how to handle that. But anyways, let's just take a look here at what we're seeing here. So yesterday's candle, it's a bullish candle. Does that mean we're out of the woods yet? No. For me to begin to flipping back to bullish, I'm bearish as it stands right now. Still bullish on the cycle, but short term bearish right now. What I need to see to convince me, because we are seeing these, there's just so much more power to a downside move than there is to an upside move. And that's noteworthy. When there's a lot more power to a downside move, it means that there's not a lot of demand, and it's easy for the herd to get shaken out of positions. When there's a lot of power on a upside move and not a lot of power on a downside move, it means that negative news doesn't really have the same effect on the markets. So what do I need to see? Well, we are below all the moving averages. Let's just zoom in here. We are below all of our moving averages. So on the daily chart, we are below the 7, we are below the 30, we are below the 50, we are below the 200. You got to be above something if you're going to have paint the bullish case here. Last time we were bullish was when we were pressing up against here, and when we went for that attempted breakout, but that breakout had a rejection, and that rejection resulted in a new low. So we got to flip our bias a little bit. We need to get above one of these moving averages. That's checkbox number one. The second thing we need to do is we need to break this downwards sloping line of resistance, right here. Until we get above that, there's nothing really to be too bullish about. So we got to get above the 7, we got to get above the 30, and we have to get above this downward sloping line of resistance. If we can do that, then we have a chance to flip the bias. And the bias, the official technical bias flip, happens at this dot right here. It's probably small for you to see if you're watching on mobile, but that dot is set at a price of 102,484. That price moves every week. So every week it gets to a lower and lower price. The price prior to that was at 104. So we went from 104 to 102.4. So it comes down every week. So we will see how things progress there. So as it stands right now, probably the easiest way to interpret this market is if we are below this line. Let's actually mark it. You guys know what I like to do. You know that I like to mark things out like this. Keep it really, really simple. Sometimes the best analysis is just one stupid line. And below this line, bearish. Above this line, Come on. Above this line, bullish. And you can really keep it that simple. Below this line, bearish. Above this line, bullish. If you're new to analysis, it's very common for a new trader to pack on too much and think that it gives them an edge, when in reality it doesn't. So they'll have the RSI, and then they'll add the MACD, and then they'll add the stochastics RSI, and they just add all of this gobbledygook to their chart because it makes their chart look like they're a professional trader, and they have all this shit all over the chart, when 9 times out of 10 the best performing indicator is going to be either price or one stupid line. And that's what we're going for today. Just one stupid line. Above it, bullish. Below it, bearish. Keep it simple. Okay. So as we discussed in yesterday's show, during the panic, during the turmoil, what do we need to see on we'll do some high time frame stuff. So we said, we have a lot of this monthly candle left to play out. Lots of the monthly candle left. There's 23 days left in this monthly candle. And we said, if this candle can repair the trend and close green, even a tiny bit green, even as a doji green, then we're good. We're good. And I think that will be a repair candle. That'll be a signal that there's a trend shift occurring, and you'll have, not a little bit green. It needs to get above the open of the prior month. So it needs to get above 84,400, 84.4. If we can close this monthly candle above 84.4, which yesterday seemed like a monumentous task, now we're up at 80, $4,000 move in Bitcoin's really not that much. It seems a lot more achievable. So watch out for that over the next 23 days. But let's go to a little bit of a shorter term analysis, because I'm sure you guys are wondering to yourself, you're asking yourself, are we going to correct back down? And I think the answer is yes. I think we are going to correct back down. So what a lot of people get surprised by is these automatic rallies. So in Wyckoff, we call them automatic rallies. You'll get a big washout. You'll get a big move down. You know what? I'm not going to attach fancy terminology to it. When you dump, you pump. And when you pump, you dump. It's that simple. And the reason is, especially when you're in highly speculative market conditions, which we are in right now, when the market is highly speculative, you have a lot of over reflexivity. So when the market panics, it panics too low. It goes down too low. And when the market gets bullish, it goes too high. So the market itself is a very accurate way of determining appropriate price. A lot of people say, oh, Bitcoin's undervalued. I guess you could say it's undervalued, but it's not underpriced. I always think that the market is as close as it can be to the reality of price. I think that the market is the best measure of price that we have out there. So when we're looking at, these really, really overly negative days, like we had negative news on tariffs, how does that affect Bitcoin? The market said it affected Bitcoin this much, but the reality is it probably affected Bitcoin this much. So you get the overreaction, and then you get the rebound back up to normal price. It should have been expected that we were going to have a rebound. Now, what often comes with a automatic rally is what's called a secondary test. And this is a test of support. Now, depending on how high we rally here, if we rally all the way up to the white line, we will likely get rejected from that white line, and we might come back down and retest some area around here. Actually, some area around where we're sitting right now. something like that. So let's say we did continue to rally and we come up against this white line. Maybe we even get a little fake out and we get a rejection. We'll probably retest somewhere here. That's if we continue to rally. If we don't continue to rally, and let's say we get the rejection here, we will likely come down and test somewhere around, getting tongue-tied, somewhere around the lows down here. So watch out for that. There's really nothing in the middle here. I mean, I guess you could make the argument that you could rally down here, but as soon as you're down here, the market's going to be calling for lower levels and it'll get volatile and it might overcorrect down to those levels. So the two higher probability outcomes for me right now is a retest down here at around 75 or a rally rejection retest around the level that we're at currently today. So we'll have to see how that plays out. But yeah, if you guys want access to the free Discord where we're sharing all of this stuff, all you got to do is just create a free account on blackbox.pro. So go to BLKBöX.pro, create your free Bitcoin trading bot dashboard. Once you are in this dashboard, go down to join Discord. Once you click on join Discord, you'll be able to get free access. There are links down below for the Discord, but just letting you know, it's harder to get into the server through those links because we have checks and balances to keep scammers out. If you've created an account, we're going to run under the assumption you're not a scammer. So the links that are inside here are going to help you get in. All right, let's catch up with chat. Good Luck Duck has the same line as me. Simple line, man. Simple line. Hi, Blue. I added more CRV and Sonic. I think we are at the start of wave 5. I do not. I put Elliott wave theory in the same basket as astrology. It's not. It's just a bunch of pseudoscience and gobbledygook, and I don't know. It's not definitive enough. It's too interpretive. One of the things that I don't like about the Wyckoff method is I find it can be overly interpretive. But the only thing more interpretive than the Wyckoff method is Elliott wave. So me personally, I'm not a fan of Elliott wave. You could be nailing the bottom, but like we've said numerous times here on this channel, what we're most interested in is watching the changing tide in Bitcoin dominance. So although I think CRV and Sonic could potentially be good players in the context of an altcoin season, I'm not going to front run altcoin season. To front run altcoin season comes with a lot of risk because you can experience way more downside right now. And I'm not trying to scare you out of the position. I've been expecting this rotation to happen soon, and we did have a very high fear event. So if you were to pick a good spot to make an entry, you chose a high fear, high volume event. So if we're close and we're looking for a catalyst, you might have nailed the bottom. It's just, if you didn't, then we're going to go to much lower lows on CRV and lower lows on Sonic. But you do you. I'm not trying to convince you. I actually think that, if you are, it's not a bad buy. It wasn't a bad buy. It's not the buy that I would take, but for someone who's playing it maybe a little bit more aggressively, I don't think it's a terrible buy. Good Luck Duck doing 100x. 100x. Doing 100x leverage. Also, as a side note, for anybody who's watching, leverage is a cool tool. It's a very interesting tool that, we push here on the channel. Our bots use leverage. We are shilling affiliate links to leveraged exchanges trading futures. We don't have anything against leverage, but I've got to tell you, do not trade leverage on altcoins. You could make the argument for like the top volume altcoins, the absolute tippy top volume of altcoins, like Solana, Ethereum, maybe some XRP, but honestly, like alts are so volatile. What the fuck do you need to add leverage for. It's just a reflection of greed, and it's something that the market will spank you for. When you're greedy in this market, you get taught a lesson. Generally speaking, some people get away with things, but when you're greedy in this market, the market knows, and you will experience tests throughout time. You might get away with it once or twice, but eventually you won't. You know, there's an old saying on Wall Street: bulls make money, bears make money, pigs get slaughtered. And it's a reflection of greed. If you're too greedy, you'll find yourself on the receiving end of the market one of these days. So don't trade leverage with alts. That's, you know, that's not only my own experience, that's statistic experience as well. Johnny, hey man, how's it going? Welcome in. But let's take a look at the two that you decided to take a position in. Let's go to CRV. Let's just see how it's doing. CRV BTC. We'll start on BTC. Top of the channel, came down for a test below the channel. Hey, you know what? Like, it's not a bad buy. It's not a bad buy from a technicals point of view. It's really not. If you are buying this red candle, anywhere on this red candle, it's not a bad buy. If we rally off of this level. If we go for a double bottom, well, it was a shit buy. But if, you know, if the sentiment begins to change in the market and we rally off of this level, great. You don't want to see this. You want to see us get that that breakout. This is probably where I would be a buyer personally, because this would likely line up with a breakdown in Bitcoin dominance. But yeah, to each their own. Just don't trade it on leverage, man. Don't trade it on leverage. Let's see what it looks like on the dollar pair. Curve USD. Where did we have curve? Right here. If I'm just entering the market now, should I only be buying spot BTC? Yes. It's a tricky question. It's a tricky question. Right now, Bitcoin dominance is still climbing. So yes, just spot BTC. Do not touch leverage of any kind. Don't go to our affiliate links and don't go to, I mean, you could go to our affiliate links and buy spot, but stay the fuck away from leverage. If you're just getting in now, just know, try to be honest with yourself as to what your intentions are. If your intentions are to make investments, then just buy Bitcoin. Just buy Bitcoin, buy it on the exchange, take it off of the exchange, put it in a hardware wallet, and fucking wait. That's it. It's really simple. It's one of the easiest investments out there. If you're trying to learn how to become a trader, look at how much money you have that you want to invest right now, and then flush it down the toilet. And then ask yourself how that makes you feel. Because your first account that you're going to trade with, if you decide to become a trader, and I'm not trying to discourage people from learning this. I mean, I pay for my lifestyle. I'm living Dubai. I'm a digital nomad. It's done a lot of good for me. I'm not knocking on being a trader. I'm just being realistic that, you know, like anything, it takes money to learn how to do a new skill. And with trading, there's no school. There's no like, come over here and train at Harvard and take a trading class or any of that stuff. It's a real solo profession, but there is a tuition, and the tuition is your first account, at least your first account. So if you're wanting to invest. Just make sure it's something you don't need to worry about, like Bitcoin. Keep it on a hardware wallet. You're done. But if you want to trade, just know that you're going to lose it. So if you start out with, $2,500, $5,000, and you would be extremely upset to lose that $5,000, maybe scale it back to 500 because you're going to lose it. You're going to lose it. It's part of the learning process. So yeah, curve. I mean, we've said this chart looks nice numerous times, and look at this. Like that wasn't even a negative day. Now that could also be a reflection of lack of volume. So there's just not a lot of people trading curve, which I think is totally possible as well. But yeah, not too shabby. Not a bad looking chart at all. Sonic. Let's take a look at Sonic. Sonic had a nice little rebound too. Mauricio the sniper. Not too bad, man. If we get a shift in sentiment in global economic fears and the S&P 500 and blah, 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 I would not be surprised if you nailed the bottom. You would have nailed the local bottom. Those are not bad buys, my friend. Those are not bad buys at all. Those are well executed. We can fall to lower levels. We need cooperation in what's going on from the orange man and what's going on out in the world there. But if there's a sentiment shift, like I've said numerous times now, could be good. Could be good. 59 people watching the live stream. Where are we all tuning in from? Let's take a look. Come on now. Load so I can see who's viewing where. If you're watching on YouTube, hit the like button. Helps us out quite a bit. Hit the subscribe button if you aren't already. If you're watching on X, like it. Like the stream, retweet it if you don't mind, or repost it, or whatever the terminology is supposed to be that we say on X these days. But yeah, really cool to see everybody in. We got our peak viewership, I think, for the channel since last cycle was yesterday. So not a good reflection of like people being excited. It was more of a reflection of panic, but still, it was good to see the numbers. It's good to see the numbers. Thanks, amigo. Yeah, man, yesterday was scary, but after the rebound, I executed the buys. Yeah. Would have been better if you executed on the lows, but still. If we get the rebound, those are good. Those are good entries. Let's see how track is doing. Still no rebound on track. Let's take a look at the traditional market here. So the S&P filled the gap, and it was green. Let's get a zoomed out look here at the S&P. Are we going to continue to rally today? Is the low in on the S&P? We're very oversold. Very oversold. 27. When's the last time we had a 27 on the S&P? Last time we had a 27 on the S&P was COVID shakeout. My word. Got down to 20. Yeah. So, we could be repeating this whole thing. No joke. That could have been it. That could have been the tariff war meltdown. How far did this thing melt down? Let's see how many similarities we can draw between that and COVID. Kind of pathetic if a tariff has the same effects on the market as a global pandemic. But let's just have a look. Let's have a comparative look-see, shall we? 35%. We definitely didn't do 35%. We did 21. So nowhere near as violent. Nowhere near as violent. kind of a similar structure though. You had this sideways failed rally into a real rally formation, and then you had this sideways failed rally into a real rally formation. The S&P is just a weird chart, man. It's a weird chart when you really look at it. But yeah, we could be looking at the rebound. We could be looking at the rebound. I think the fear event isn't done. It was a pretty violent day. It was a pretty violent day. I feel like, so like typically with these events, with these narrative driven events, you'll have like a couple days where it's like 10 to 20% of the effort being applied, where it's like the smart people who are like, yeah, no, this isn't looking good. I'm bailing. And then you'll have like the majority of the event where it's like 80% of the people are like, no, I'm out. I'm selling. I don't care the price. I'm out. This capitulation event. And that's like 80% of the overall volume. So if we do have a couple more negative days, it's either going to be way, way bigger, because that means that wasn't the 80%, or the more likely scenario is we might get a couple more down days, but kind of a solid recovery. I don't think we can really fall much further without us climbing higher first. We need to climb higher. That's just the way the markets are. You need, in order to get maximum pain results from the market, you need to lull people back into complacency. Everybody's on really high alert right now. Everybody is very afraid right now. The vast majority, like it's all over the news. Fear mongering is everywhere. Twitter is ablaze. There was a fake tweet. There was a couple fake tweets that kind of went viral yesterday of an emergency Fed meeting that never happened. So like people are freaking out. So I'm going to go ahead and just guess that was kind of the 80% of that move. That was the meat of the move, the last couple days. So I think we may not be done, but I don't think we're going to see another day like that in particular. I don't think any retaliation tariffs from any of the other countries are going to have the same effect, because let's be real here. The US is the largest consumer economy in the world by like a large margin. They don't fucking make anything. They import everything. So China coming in and being like, oh, well, we're going to put a tariff on US vehicles. Would it be negative news? Yes. Is it going to have the same impact as what happened with the U.S. saying anything that comes into our borders is going to be tariffed at 20%? No, it's not going to have the same effect. So I think the meat of the move is in. I think it's in. JT, you think you could take a look at SPA and C-Pool? Charts look like trash, but there was some momentum pre-dump. Sure, we can take a look. I'm kind of banking on them pushing lower until the Fed pivots. Does that mean you're short? What do you mean you're banking on them? After a little pump, for sure. Yeah, it can go lower, but I think that we're going to have a little bit of a relief rally. And that kind of, there's nothing like a change in price to change the narrative. You'll develop some sort of reason why things are all good again. And then people will start going long. And then now you've added fuel to the fire. What does the composite operator want you to do? What does the composite man want you to do? They can't squeeze any more juice out of you at this point. They need to make you go long. Then they can take your money. That's how the composite operator manipulates this market. Okay, SPA and C-Pool. Before we do that, I want to just look at it on CoinGecko. Sorry you guys are having to deal with this distorted view. I'm on my iPad and I've stretched it out If it's super annoying, let me know in the comments, because I do have another screen, but I'm trying to consolidate things down. I have too much shit as a digital nomad. I'm trying to make my nomadic studio as small as possible. Spa. Spirex. Is this right? Let me know if I'm totally off base here. Earn passive income on your crypto assets. Red flag, red flag, red flag. Guys, if you haven't figured it out from the last cycle, there's no such thing as passive income on crypto assets. The yield comes from somewhere. What is this ranked? Almost 1,000. Market cap 22 million. Yeah, I mean, you know, we'll take a look at it, but you know, I'm not buying it, and I don't endorse anybody else buy it. So here's what it looks like on the dollar. Not something easy to hold on to. Jesus, this is insider bullshit. It's like, it's legal to steal from people now. I don't know if you guys have figured this out, but it's now legal for founders to found companies, pump tokens, spend 100% of the budget just on marketing, and then sell it on the people that they're marketing to. It's stealing. It's legal stealing. I don't think that this is going anywhere. I don't think it's going anywhere. It's a fucking... Mind you, I don't know much. This is super surface level. You're out of support. I don't know. It seems to be an oscillator of pump and dumps. So they pump it, then the insiders dump it. Then they build it back up again. They pump it, then the insiders dump it. And then they'll build it back up again. You can build it back up along with the insiders. And then when they pump it, you can sell it alongside the insiders. There's a pattern here of pumping and dumping. So you can make money on pump and dumps. You just need to be on the inside. Not for me. Not for me, friend. But I wish you well. What was the other one? Sea Pool? Clearpool. Clearpool.finance. So I don't know. It's hitting a lot of the same notes. I'm going to guess just by these two picks that you've had me look at. I'm just going to guess you're probably from the last cycle. You were around during the DeFi summer, or you were at least around during Ethereum DeFi. Let me know if I'm right on that. Because we're hitting a lot of the same notes from last cycle. The first decentralized credit marketplace, loans originated. Staking, yeah, this has just got 2020, 2021 cycle written all over it. Sea Pool, let's pull up a chart. Clearpool. Yeah, this one's not terrible. It's not as bad as the other one. It's got at least a little bit of an accumulation. But I just don't know what it's going to do. Like, I don't know how much of a return it's going to bring for you. The reason I say that is because this is old cycle shit. Like, these are old narratives that have already been digested by the market. It doesn't mean that they can't go up. It just means that they're less exciting. It's not the next new shiny thing that everybody's in love with. It's the old shit that everybody hates. There's stigma attached to Ethereum DeFi. Is it Ethereum too? Is it Ethereum DeFi? It is. It's Ethereum DeFi. There's a stigma attached there. So again, it doesn't mean that it can't go up. It just means that you have forces, negative forces working against you. But it's sitting on top. This is kind of the area where you would expect it to take off. So if we do see cooperation in the altcoin space, if we see cooperation coming out of Bitcoin, and if we start to see Bitcoin dominance drop, I think it can begin to climb. I think you will see a move up that will, take out this high and probably head to new highs as well. I would caution against thinking that it can reach all-time highs. Certainly this wick of an all-time high, fuck that. That's just probably completely off the table for me. But in the right conditions, in the right market conditions, you could feasibly see it going to $2 to $2.50, something like that. Currently sitting at 10 cents. That's not a bad trade. But you need a lot of the right conditions in place. And the thing about it is, with those right conditions in place, there's going to be more well-known projects that are going to do much better than just a 10x to a 20x. Not to say that 10x or 20x isn't great, but there's a lot of ifs. There's a lot of ifs, ands, and buts attached to that statement. I would, typically what I do is there's Bitcoin, and then there's whatever's new and exciting this cycle. And there's nothing in between. If it's from last cycle, I don't care. Some noteworthy honorable mentions for that are, Litecoin BTC. Litecoin BTC, when you really zoom out here, here's Litecoin BTC. Fucking horrendous. Just the lowest it's ever been, period. The lowest price it's ever been. And we've already been in like the first half of the bull market. EOS BTC. Same shit, different chart. The lowest it's ever been. Horrendous. Neo BTC. I'm doing a throwback to paint a picture here. Garbage. Atrocious, horrendous garbage. ETH BTC. Fucking horrendous, atrocious garbage. They just, every cycle repackages the same ideas into a new coin, with the only exception to that phenomenon being Bitcoin. And the reason Bitcoin is different is because Bitcoin's actually different. Bitcoin's actually decentralized. Bitcoin's actually censorship resistant. Bitcoin's actually sound money. So Bitcoin is fundamentally different from all these things. But every cycle, you get new coins and you get the same ideas packaged up into those new coins. So what I would do instead of Clearpool, I would find out what the new Clearpool is. What are these guys? What are some of the narratives and buzzwords that these guys are doing? And what is their claim to fame? What can their blockchain do, or what can their product do that nobody else can do? And then what's doing that idea this cycle? You would do much better. You would do much better. Not in a short, just speculating. Anything scares everybody these days. It's unreal. It is unreal, Max, and that's a very astute observation, because it is something that is indicating to us that we are topping in the markets. We are topping in the global markets, because things are only volatile when they're not fundamentally driven. everything in the market is speculative. There's always this ratio. There's fundamentals and there's speculation. And speculation will always go under and over on fundamentals. When fundamentals are strong and well understood and investment is responsible, the speculation will go above and below fundamentals, just, slightly above and below. Slightly above and below. But as the speculation intensifies and people become fucking pussies because, all of this stuff is happening and they've forgotten what this is. They don't even know what this is. And they're just listening to the headlines and the Fed announcements and all the bullshit. You're approaching a macro top in the market for the market, period. Equities, real estate, commodities, you name it, it's overpriced. You name it, it's overvalued. Crypto. So it's we're approaching that, and that's a sign. That's a sign that you've identified that we're getting close to a top in the market. So yeah, it is crazy, but it's also where we are with things right now. JT, what are your thoughts on gaming projects? I think gaming is going to be massive. And the tokens are going to be Bitcoin. Because what we've seen in the past, what we saw last cycle, and the cycle prior with CryptoKitties, is that if the game issues its own token, it kind of cannibalizes itself in the sense that if it doesn't do well, then the things are worth less, and then less people play, and if less people play, then there's less tokens, and then everything goes down. It's a cannibalistic feedback loop of this spiral of death. The only way to break that spiral of death is to use tokens or use an issuance of token that is either redeemable for a hard asset or is the hard asset itself, so that its value is determined separate from the game. So for example, let's use the example of Axie Infinity and SLP. SLP, its only purpose was to incentivize players to play. That's what its only purpose was. If you replace SLP with fractions of a sat, so you get a tenth of a sat per SLP. Well, now it's not its only function. Its function is to incentivize people, but that's not its only function, because Bitcoin's also money. SLP is also money. That's the only way to break the feedback loop. So there's a couple things that make that disappointing for people that are like, well, what do you think of the gaming sector? Is it going to come back? No, I don't think it's going to come back. I don't think the alts are going to come back with gaming. I think gaming is going to come back, and it's going to do it right this time. And it's going to use the underlying asset, the truly valuable intrinsic asset, as the reward mechanism for the game. Where are they going to get the sats? You have to, when you buy a game, you got to buy it, right? So you buy the game with Bitcoin. And now a portion of those sats that you purchased the game with go into a pool, and that's the incentive pool of the game. And they manage their kind of incentive treasury of Bitcoin, and they use it to incentivize players to compete in tournaments. Just as general ways to get people engaged with the game and marketing and get them addicted to playing the game. I think that there's definitely a future where blockchain is a really, really important part of gaming. But are you going to be able to make money from it? I don't think so, unless it's just furthering the adoption of Bitcoin and you're a Bitcoiner that holds a bunch of Bitcoin. Then yes, you're going to make money off gaming. That's my thoughts, at least. It's almost like I never learned cycle to cycle. Wow, it's your second time around, man. You're not going to get it perfect. You're going to do better than the last time. You're going to do better than the last time because you're going to know what it's like to lose money. But the thing that you're going to find yourself screwing up on, in my opinion, is not letting the winners run enough, which is way better than letting your winners melt to zero. letting your winners just melt away and lose all your profits. That's shitty. What you're going to find is you're going to cut your winners too short, probably this cycle, and then the cycle after that, you'll nail it. Where are we? What are we looking at? What was this? I don't even remember what this was. Whatever. $58 people watching. Nice. Liking the numbers. Bitcoin's looking like it wants to go. Wants to get back up there. Kind of pissed we lost that trade, but oh well, that's trading. Can't win them all, ladies and gentlemen. If it was that easy, it'd be called money printing, not trading. The shitty ETH. ETH wasn't always shitty. It wasn't always shitty. They made a big mistake here. And one thing that really helped me become a Bitcoin maximalist is, I'm sure everybody out there wants to become a Bitcoin maximalist, right? We have such a good reputation. But one of the things that really helped me understand why Bitcoin is so different is proof of work is probably one of the most profoundly misunderstood and influential things that is going to happen to this world. Monetizing and subsidizing the energy sector through greed and incentives is going to change the fucking world. And when Ethereum decided, nah, we're going to be green, we're not going to do mining anymore, we don't need mining, look at what the result is. They went from proof of work to proof of mistake. Proof of stake is what we already have, ladies and gentlemen. Proof of stake is a system that rewards wealth. It doesn't reward productivity. You don't want to support a system that doesn't incentivize productivity. Proof of stake means, yeah, I got 32 ETH, man. Fuck you. And because I have 32 ETH, you are going to give me a portion of every transaction that you do while I sit back and do fuck all. Oh, you want to use the Ethereum network? Well, be sure to pay my validator while I just chill here on the beach and do nothing. Whereas proof of work, you got guys going to work every fucking day, replacing miners, paying for electricity, fucking harnessing the powers of nature, harnessing hydroelectric dams to run their generators, to run their machines, constantly balancing the network, trying to figure out maximum throughput, tweaking machines, repairing machines, going in and working to make sure that your transactions get through every single day. What do you want to support? What do you think is more important that we build a system around that is built on incentives? Do you want to incentivize someone to work, or do you want to incentivize someone to do nothing? And that's the difference between proof of work and proof of stake at a very high level. But yeah, you know, this is the result. Proof of stake, number go down. First XRP ETF gets listed tomorrow. I'll believe it when I see it. I'll believe it when I see it. Why do we need an XRP ETF? Why do we need an XRP anything? I don't know. My hate on XRP can only go so far. It's the AOL online. It'll have its day. AOL was super popular. Back in the early days of the internet, AOL was the dominant centralized internet access. It went away, and so will XRP. You got me, man. Once I'm out of my position in XTX, I'll port in towards BTC. Stacks isn't proof of stake, though. I think maybe they are proof of stake. I don't know. I haven't done much research on stacks. I just know that, to use their apps, I needed to use the STX token, and that doesn't fly with me. If I got to use your shitty token, that means you're just trying to create value for a shitty token instead of just doing what you should do. This is the thing. Like, everything that Stacks does, every function, everything that they have built, they can execute every single one of those functions using sats as the currency for that. But they chose not to because they could make more money if they made their own currency. And, no fault against them. That's normal. From where we are in the development of blockchain and from where we are of the adoption of these protocols, it's normal for people to decide to do the greedy thing as opposed to doing the right thing. The right thing is to support the Bitcoin network with scaling solutions that use Bitcoin. The greedy thing is to support the Bitcoin network with scaling solutions that use your shitcoin. Bulls make money, bears make money, pigs get slaughtered. They will get slaughtered one day. But you can still make money because nobody really understands that. Guys, we're so early. Like, I can't emphasize that enough. Like, we're so early. Nobody understands any of this shit. Nobody has a fucking clue, like, at all. Just trying to explain to someone, like, what the difference between Bitcoin and Ethereum is, like, next to impossible, let alone trying to explain them the difference between a technology company and a protocol. Like, good fucking luck, dude. Nobody understands what a protocol is, let alone, that there's a distinction between Apple computers and email. It's just so, we are nowhere near that level of comprehension. So as a result of the lack of understanding in this world today, this price is going to go up, man, because if the narrative is digestible and people can understand it and they're willing to put their money on it, it'll go up. It'll go up. No problem. Not a problem at all. I just think long-term sustainability, I want you guys to remember that in the long run, it won't work. In the long run, it won't work because we have enough history of protocols to prove that the original protocol design has the strongest network effect, and the strongest network effect of protocols is the protocol that we use, for better or for worse, because that's another criticism that goes towards Bitcoin. Oh, it's slow, it's clunky, why don't they just increase the block size, blah, 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 blah. The email protocol that we use today, there was better versions of it. There was better versions of it that were faster or whatever, or private or like whatever. There was like better versions of the email protocol, but it didn't matter because protocols are based off of this network effect. And Ethereum has 4,000 nodes. Bitcoin has 20,000 nodes and growing every day. And Ethereum nodes are going down. Bitcoin nodes are going up. Nobody is going to get to 20,000 Bitcoin nodes today. They're just not. And by the time they get to 20,000, Bitcoin's at 40,000. And by the time they get to 40,000, Bitcoin's at 80,000. They're never going to catch up. And because of that law of network effects, for better or for worse, it's Bitcoin. You got to build on Bitcoin. But we'll still get a bull market. Don't worry. STX will go up. STX will go up. It'll probably get to a higher price too than what we're looking at right here. But yeah, flip that shit into something worthwhile. Yeah, nobody knows any of this shit. None. One big lesson I learned this cycle is to take profits and set those profits aside for 6 months. No point in reinvesting the same asset class because they're all correlated. Wait 6 months at least. That's a really good strategy. That's a really good strategy. And I kind of, in the context of altcoins, food for thought, because there's also the pressure when you're in the later stages of a bull market, which I still believe we're going to enter. You feel FOMO. So 3 of the 4 years in a 4-year cycle, if we're thinking that there's 4-year cycles, take profits into cash. Don't touch them for 6 months. Super solid strategy. Super solid strategy. But let's say you're trying to capture that rotation into alts and you're trading into Bitcoin. Now, I'm not trying to sway your decisions. I'm just telling you the way that I look at things is I will take profits on the alt, but I take profits into Bitcoin. And then I'm just building up that Bitcoin position. So yes, I'm not going to touch it for 6 months, but it's still Bitcoin and we're still in a bull market. So the number's still going up. It's just a much easier, it's a consolidation of the portfolio because, you know, there's always Bitcoin, but it's a consolidation of the portfolio that keeps making money. And then when it's time to like, okay, we're done, we're out of here, then you just have, you know, 3 or 4 positions to manage because you've consolidated your 20 into Bitcoin into one of your 3 or 4 or 5. And now you can move much faster. Give the man a likes. Thank you, Maynarth. Appreciate that. Yeah, like the video, ladies and gentlemen. Only a few on YouTube. Only a few likes on YouTube. Come on, show some love. And all the comments are coming in from YouTube. I'm not sure. So we get a lot more viewers these days on X, but we don't get very many comments on X at all. So if you guys are wanting me to, you know, look at different things, comment on X. I see the comments. I see them in real time. Treat it like a live chat. I'm here for you. We can take a look at anything you want. Shitcoins, projects, whatever you want. We'll take a look at it. All the comments are coming in from YouTube, which is great. I love it. All right, we'll wrap things up with Bitcoin. Bitcoin's making the rebound. All right, so what are we thinking? What are we thinking? I'm thinking there's a possibility we come up to somewhere around this level. Somewhere around this level, but below the white line. There we go. CoveCon making the first move on X. My man. We'll come up to somewhere around this area. So we got a lot of confluence here. We got kind of the 94 support / resistance flip area of this consolidation that we've been mapping out for a while. Let's actually clean this up a little so you can see it a little bit better. And then we have the downward sloping line of resistance. So I could see us coming up to this level, maybe even a little short of it. But I think this rebounds, I personally believe that this rebound's not quite finished. And then there will be a pullback. There will be a retest. There will be another wave of fear in the markets, whether it's tariff driven or, you know, whatever. There's a lot of bullshit headlines in the market right now, and there will be a retest. But I also think that at some point we are going to have that pivot. And when we do have that pivot, Bitcoin has shown a lot of relative strength when compared to other assets. I mean, we've seen some really red days in the S&P and the NASDAQ, and Bitcoin has seen red days alongside with it, but nowhere near. And that is a reflection of fundamental demand. You know, the speculative demand that's going above and below the fundamentals. That is a reflection of the fundamental demand that's coming. The fundamental demand that's here, that's been holding us up, that's been giving us that strength, that's been propping us up as well as we've been going. So yeah, we'll kind of end things out there. Before we head out of here, I encourage you guys to go over to blackbox.pro. That is BLKBöX.pro. Get your free Bitcoin trading bot dashboard set up. We're going to be adding spot bots. We currently only have futures bots, but we're going to be adding spot bots in the very near future, and copy trading will also be added as well. Once you're in here, go down to this join the Discord tab. Yes, there are links below to join the Discord, but I encourage you to go through the dashboard so that you can be auto verified as a member. Membership will be, that's the easiest way into the Discord. If you want to use the links below, you can just follow the directions that are that you'll be met with. You'll see what we're looking for. Start open up a support ticket. And we'll say hi and we'll go from there. So that is all the time I have for today. We do have one question. I'm gonna answer the one question here on X before I head out here. CP, Internet Computer Protocol, isn't just another blockchain. It's a breakthrough technology that fuses the internet with decentralized computation. It's the only blockchain that can run smart contracts, websites, and full systems directly on chain. Ultra fast, scalable, eco-friendly, never has zero fees. Is this a one-liner? Is this a one-pager? You work with these guys? Built to be a hack-proof through advanced cryptography and architecture. ICP is backed by the largest R&D team in the entire Web3 space. This isn't CovCon. I appreciate your input and I appreciate your enthusiasm. And you can reference my answer to that in other live streams. All right. Thank you all for joining in, everybody. And we will see you guys in the next one, which will be tomorrow. We're streaming every single day, except for the days I don't. All right. Have a good